Well, my call, actually not so much for today as today, but for the next weeks, is that we will trade range bound on Bitcoin between 60 and 70,000. We have seen the dip below 60,000. I think that more or less is over. And we come to that when we speak about derivatives. It's actually a nice situation for traders because you can get in and out. You just trade between the ranges and you can make some money with that in a professional way.
It's Thursday, May 9th, 2024. Good morning and welcome to Markets Daily. I'm your host, Helene Braun, markets reporter here at CoinDesk. If you're interested in the Asian market and what's going on with the spot crypto ETFs over there, make sure to check out our episode from yesterday, which featured a guest from Hashkey, which is one of the issuers of the spot crypto ETFs in Hong Kong. We actually have another Asia-based guest today, but our conversation this morning will be a bit more focused on trading, specifically that of crypto derivatives, which in March of this year saw its volume surge by 86% to a record high of close to 6.2 trillion. That is trillion with a T. So if you're interested in that, stay tuned for our guest today. But before that, I want to quickly look at what the market is doing. Bitcoin is down quite a bit since yesterday by about 2%. It saw a pretty significant drop during yesterday US morning hours, and it's now trading at a little over $61,000. Meanwhile, Ethereum is down by about 0.7% at $2,972. So let's see what's going on here with our guest, BitMEX CEO Stefan Lutz. Good morning, Stefan.
Hi, Helene. Nice to see you.
Nice to see you too. So, Stefan, we ask everybody on this show about their call of the day, which can be a price prediction or anything else you think the future could bring in crypto. What's yours today?
Well, my call, actually not so much for today as today, but for the next weeks, is that we will trade range bound on Bitcoin between 60 and 70,000. We have seen the dip below 60,000. I think that more or less is over. And we come to that when we speak about derivatives. It's actually a nice situation for traders because you can get in and out. You just trade between the ranges and you can make some money with that in a professional way, which is good. So for me, it's really, I trade myself exactly in this range. I mean, the moment we break out below or above, I guess we will either have a major correction or the next, let's say, all-time highs we see. But for the next week or so, I expect really like between 60 and 70,000. Everything can happen any day.
So it's great that you bring that up, and I want to hear a little more about that because Bitcoin, as I just mentioned, is nearing the $60,000 mark again, and it did briefly dip below that earlier in May, but rebounded quickly. Mm-hmm. I guess, what's your outlook on Bitcoin? Do you think it's going to dip below 60,000 before going back up, or do you think the correction is nearing its end?
I think we still have a lot of uncertainty in the market, especially about what miners will sell in the market. Because after the halving event, it's really about what's the hash rate, what is the underlying implicit price of a Bitcoin to mine it. And we had a time where the implicit price was much higher than the actual market price. And that led for miners and other people to sell. So we still have that. It's every time, all the 4 years after halving, you have that volatility in the market. I think that's still the case. So there is a residual risk that we see something well below 60. But my personal, let's say 75% prediction, which I'm trading on myself, is actually we will stay above 60K and we will rather trade for a couple of weeks between 60 and 70K before we then enter new all-time highs.
So is this 65K for the end of the year or just the next couple of months?
No, I would say for the next couple of weeks or months. I would expect that we see major action either shortly before or after the summer break. Summer break will be pretty dull. It's usual. People go off, go to the beach, do whatever they want. Even the institutional players, they're a little bit muted. So either it's before, it's a little bit like we had the price action before the halving, not after it, right? The first one. So it's either then, but I think like especially Q3 will be another more bull market in terms of price. We see the volumes have been up, as you said. We are in the middle of a bull run basically already. If you see where we come from last year, around 50 to 20K, right? I mean, now we're already at 60 to 70, but I expect another jump, so to say, around Q3.
Right. So Crypto trading volume, however, was down pretty significantly in April by, I think, nearly 44% after reaching a record high in March, similar to derivatives. Um, we'll talk more about derivatives in a second, but I want to quickly zoom out and talk about the broader market. Is this a result of, simply the geopolitical tensions and overall macro environment, which you just touched on, or could this also be a result of the excitement around crypto stalling a little bit after January when the ETFs launched?
Yes. What we saw is we had the crypto ETFs joining the game. They brought more demand into the space, and it was all pre-halving. That's number one. So we actually had it's not a real English word, but a preponement. So we brought forward what we actually expected for the time now. That's number one. And then you had the price action, like going to all-time highs, then correction, high correction. And then we had the ultimate correction. I mean, not the ultimate, but the correction below 60 right now. And after that, and this is especially for the derivative side, and I want to speak about that in a moment. The thing with that is many people have been burned. And if you're in the crypto derivatives markets, which mainly consists of perpetual swaps and dated futures, you have a winning party and you have a losing party. So basically people were burned and they actually lost money. So, and those people still need to recover from that. So I guess we will see a little bit of caution right now. And people waiting for clear directional price action, which actually is interesting if you then think about what we just launched, which is options, because for options trading, you can take a position and you're not getting liquidated. So you can, let's say, bet or hedge or speculate on a certain price action, but you are not burned as if you are burned with a perpetual swap. So that's actually the next thing, right?
So let's talk about that for a second. BitMEX announced the launch of options trading in collaboration with PowerTrade yesterday. Tell me more about that and clarify for me who can invest in those, because as far as I know, the platform is not available to US investors. Is that correct?
Yes, that's correct. I mean, that's the let's say big thing. It's actually, we are not touching US citizens. We're not touching US persons. We're very strict about that. But basically, if you subtract all the sanctioned regimes in the world, I mean, we're adhering to all sanctioned regimes out there, and we have full KYC, AML, and trading surveillance. But other than that, it's unrestricted. You can onboard with us. But on the option side, so we are bringing some healthy competition to option markets. So far, it has been dominated by a few market players, and it's more important, the options offerings that you have are more institutionally geared. So you have pretty high minimum lots, so minimum trade sizes you need to have. And the second one is you are an open order book, which means if there is a buyer or a seller, then you can trade. If there is not, then there is nothing. And you have only Bitcoin and Ethereum margin. So what we bring to the table is actually covering all of those. So number one, we are USDC denominated, which is easier for pricing, but you can give us collateral in many currencies out there. Number two, we have a minimum lot size, but it's 1/10 of the current minimum lot size, so it's more applicable even to people with a little bit less of capital. And we operate together with PowerTrade a so-called RFQ, a request for quote model. That means you can go to the order book, you just trade, so you hit the button, you execute, that's fine. But if you want to have a bespoke strategy, so for example, you say Bitcoin, if we just take Bitcoin is within a certain price range that you set, you can actually structure your product yourself and you get a bespoke quote for what you want to trade. So it actually opens the space for even less liquid or lesser or lower liquidity contracts. And it offers the space for everyone who is interested in that with a limited risk. Because as I said, I mean, but this is true for all options. You usually go long into an option, long call, long short. So either price goes up or down, but you only pay a premium. So there is no risk of getting liquidated. There is no further loss you can incur. It's basically like buying a ticket for an event that will happen in the future. And together with the low lot sizes, so the small lot sizes and the RFQ model, it's actually suited for a broader audience, which is what BitMEX originally was about, bringing crypto and crypto derivatives to a wide array of people. And that's what we try here to do with PowerTrade as well.
So why now? Are you seeing increased demand for options, and who exactly is driving this demand? Is it mainly institutional investors? Because I know you have to be, sort of advanced trader to do these sort of trades.
Yes. Why now? Frankly, openly, we would love to have done that already last year, but it took a little bit a while to get that in a sound way. I mean, if you remember, BitMEX is the crypto exchange that never lost a coin. We are pretty thorough about liquidation algorithms. We want to protect customers' funds. We have a huge insurance fund. So we wanted to be true to our nature. So that took us a little bit longer than just launching a beta version of that, number one. Number two, why last year or now? It's actually, we anticipated this next bull run, and we anticipated as well the need to trade a little bit differently now. I mean, the market advanced, right? I mean, the last bull run, you had a lot of retail players coming new to the market. They have made their experience. They now know how to trade perps and dated futures, and now they long for that non-linear product. It's called a non-linear product. So linear product just means if I win, you lose. If you win, I lose. But with options, both parties can actually win, which is interesting. I mean, without going into financial quantitative measurements or mathematics here. But this is the interesting piece, and especially for sideways market where everyone has the, let's say, viewpoint something will happen, but you don't know exactly what. This is a time for options. This is not a time for futures or for perps, because you need to say it's going up or down. You cannot say it's either up or down. With options, you can create those strategies, and it works. And we anticipate, especially for the next weeks and months, as I said, more a sideways movement, together with the fact that there will be a lot of relative arbitrage that you can do between the main coins like Bitcoin, Ethereum, so the layer ones, and then basically the altcoins below that. And this gives you that you can do with the options market that we offer as well. So we thought about, as crypto traders ourselves, what do we like? We want to trade options, number one. Number two, we want to trade in a market and be able, as an institutional player, as well as an informed professional individual trader. I don't like the word retail, but I would say individual trader. You know the market, you know what you want to do, you want to position yourself. Hey, combine perps and dated futures together with options. That's basically, I would say, the holy grail in derivatives trading. Even in the TradFi industry, they do exactly the same. So, and this is what we wanted to bring to the table. And so far, no one of our competitors has been successful in combining those two in a way that work for a wide array of people. They work for very specific sets of people. So the biggest competitor in the option space works very well for big institutional players, more TradFi-like players. Totally, absolutely, great job that they do. We think we want to bring it to another group of people, and this is how we build it.
So for our derivatives traders in the US, is there an expansion plan here in the US, or can we expect
Unfortunately, currently not. I mean, we're always looking at the US, and it is about regulation, how safe and secure, how reliable is the regulation, right? I mean, this is what it's about. It's not about that we don't, so we like US persons, right? I mean, there is nothing in that. It's more the uncertainty for international players doing business in the US is something slightly different than the other way around.
Right.
And many of the competitors do the same, unfortunately. I mean, I know it's not where we all want to be, but this is how we can ensure that we have a compliant business.
Well, hopefully the future is bright. I want to ask one last question. My colleague Omkar reported overnight that meme coins continue to have a moment. He wrote that 138 meme coins were listed on CoinMarketCap in April versus only 18 a year ago. Is this just a natural side effect of the bull market, or do some of these creators and buyers believe there's actual value in those coins? Explain that to me.
Oh, okay. Now we're going down the rabbit hole. It's actually a long conversations I had about this when we had the Token 2049 conference in Dubai and all the other crypto conferences around that. And I have a strong opinion on that. I think meme coins are here to stay. For me, they do not represent financial investment assets as such. It's a little bit more like a fast fashion experiment. there's a lot of consumption behind that. It's a little bit like if you trade sneakers, you can trade sneakers and it looks like a stock, but it isn't. It's still a sneaker, right? And you can wear it if you want. And meme coins are a mixture. I mean, you have meme coins that actually have value and that have utility. So this is more like an NFT. And you have meme coins who very much are about the identity that they provide to the community. So the community wants to hold them. And that drives the price, which is totally fine for me. And it's actually able to do so, and it will stay there because we have the Solana ecosystem. Solana is much more efficient in terms of what you need to pay for those transactions compared to Ethereum. So Ethereum was an NFT place last year. I mean, NFTs, that was all on Ethereum, and meme coins are the next step on that. But it's just possible because you have layer one protocols like Solana who offer a very competitive let's say pricing for using this type. And as long as we will have layer one ecosystems like Solana or layer one protocols like Solana, we will see meme coins still to be there. Whether it's that big, TBD, it depends on the interest of the people. It's a little bit like social media. I mean, social media is about users, about attention, and meme coins is the same in the end. So for me, it's a natural amalgamation of social media, art, fast moving consumer goods and crypto. It's very exciting for me.
Do you have any? Do you own any?
I own some bonk and some papers, yes. Well, a couple of million. Everyone can be a trillionaire, that's fine.
No,
but this is no investment advice. I'm really in there for the fun, I have to say. I mean, if it's going for investment, I'm like the usual, I mean, it's our name already. It's like Bitcoin, Ethereum, the layer one chains. I mean, even still trade ADA. I mean, which some people in the industry say you're nuts, but I still
of course, no. We totally get it, and I'd love to go down this rabbit hole, but I think we have to wrap it here. Thank you, Stefan, for joining us this morning.
Thank you.
That was Stefan Lutz, CEO of crypto exchange BitMEX. Thank you, as always, for tuning in to Markets Daily. I'm Helene Braun. Me and my co-host Jen Sanasi will see you again next week.